Jon Stewart is either the smartest man in America, or he has incredible instincts. In a week's time, he has zeroed in, like a heat-seeking missile, on the core of Wall Street's malady. Stewart, host of Comedy Central's The Daily Show, has put the spotlight on Wall Street's corruption in general and trading specifically.
You look a lot like that dude on Mad Money. Anyone tell you that before?
I don't know about that. What I can tell you is that Stewart used a devastating video clip revealing Cramer to be the embodiment of the market manipulators that he rails against on his show.
That was the best part. That was the clip where Cramer says he would never reveal this stuff on TV.
Well, it is on TV now. And I hope a lot of people see it.
But I wonder if they would really understand it.
Well, let's break it down. Read the quote.
Quote. You know, a lot of times, when I was short at my hedge fund, and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money, unquote. Okay, now translate that for me.
Basically, he was saying, you know, a lot of times when I was making a large bet, that prices would decline in a specific stock or bond or derivative, when I worked in the largely unregulated world of private money called hedge funds, and I needed to give that decline a little unseen assistance, to make my bets profitable, I would go into the futures market to trade. That's because I could put down as little as 4 to 10% of the money I needed for the trade and borrow the balance in what is called a margin account.
So this kind of trading was being done by everyone, while the academics and economists, none of whom ever worked a day on Wall Street, have been telling us in op-eds and speeches and testimony before Congress that the crumbling Wall Street structure results from bundled subprime mortgages, collateralized debt obligations, and asset-backed securities.
Jon Stewart has bypassed all the BS. Understanding security instruments were never the problem. How they were traded was the problem. And he used Cramer to prove his point.
Trillions of dollars of taxpayers' funds have been spent on the premise that these toxic assets are the problem. The fate of a nation has been staked on that analysis, that if we get these assets off the balance sheets of the major firms, the credit spigots will begin to flow once again.
Stewart's week-long commentary and clips helped to dramatically expose this logic as bogus. None of the toxic instruments would have grown to a problem capable of collapsing the country's financial system if their trading had been regulated, transparent and fairly reported on by mainstream media.
Wall Street's supposed to have an early warning system that, if something is amiss, it will self-correct in time to avoid a collapse of the system. That early warning system is known as price action. But when trading in the market was rigged, it doesn't work.
And now, thanks to Jim Cramer, the public now knows how easy it is for an insider to manipulate the market and get stock prices to move up or down.
When trading is internalized at the big Wall Street firms, when they are able to create and clandestinely operate their own trading venues off the radar screens of the regulators, when they are able to create offshore accounts like structured investment vehicles to hide bets gone bad, there is no longer any composite wisdom or early warning system.
Is it any wonder it takes a comedian to deal with this stuff?
Perhaps, but who is laughing?